Welcome to the market outlook, mid-market outlook for the remainder of the one day that is left. Of course, on Friday we have a holiday on account of Holi, and just to reflect upon what we spoke about a fortnight back, that is on 7th of March, and that time there was a lot of gloom and doom all around, and I had requested all of you all to be a little bit more optimistic, and I had also explained the fear and greed factor. Along with that, I had mentioned that in times like distress, uh, you know, there has to be wisdom prevailing, and you should identify opportunity in crisis. I think when I spoke to all of you all on 7th of March, we were close to about 52,500 or thereabouts on the Sensex, and so forth for the Nifty. And today, as I speak to you on 16th of March, we have recouped a lost ground. Not that there is any meaningful improvement on the global news flow as far as the geopolitical situation between Russia and Ukraine is concerned. And there still is there is a situation where the dialogue is still open, but how will it materialize is something that we all have to wait and watch. There is no clear-cut answer to that. Along with that, there was one more event on the domestic front which is now done and dusted. That was the outcome of the 5-state election, and not going into much of detail over there because it is history. We all know what has happened. Market's reaction post that, of course, and of course the cool off in the energy prices. So as I speak to you, Brent is close to about $101 a barrel mark. NYMEX is close to about $97 per barrel mark. And the other most important factor on the currency front is the rupee dollar equation, wherein we are somewhere close to about 76.40 on the rupee dollar front. So there is meaningful cool off from that $130 plus on Brent and $125 plus on the NYMEX to the current level. But it would be more helpful and meaningful if we see a little bit of more strength coming in the rupee, because both these factors will have a little bit of positive impact as far as India is concerned, since, as I spoke to all of you all, close to 80% of our energy requirement comes via imports of crude oil, and India is working on securing its energy requirements in the global arena. So as I speak to you, friends, some levels, 56,600 on the Sensex, up about 150 points. Nifty is trading close to about 16,900, up close to 230 points, and so forth for Bank Nifty, which is of course seeing a little bit higher level. What lies ahead of us, just to mention again, news flow from the geopolitical situation, and of course one more scare that has come out thanks to again China is the Omicron news flow from China and lockdown, etc. And it is I remember the good old saying, what goes around comes around as far as China is concerned. So we'll have to wait and watch on these two fronts on the global news flow, Russia and Ukraine, as well as how does this entire Omicron situation evolves with China. Along with this, friends, when a fortnight back when I spoke to you on 7th of March, I had listed close to about 6 sectors following on that theme that I spoke to all of you all, identifying opportunities in crisis, and I had listed down 6 sectors, and I think there were close to about a dozen plus stocks that I had mentioned wherein you should possibly look at. No need to be Robin Hood in this kind of markets, but wisdom prevailing, you should also identify opportunity in crisis and start nibbling into some stocks, bargain hunting as we call it. And I had also explained the fear and greed factor which was taught to us by the great Guru. Reflecting back upon that, I think we should possibly be trading in near about these range, unless and until there is some huge negative news flow from the global arena. Domestic front, I don't think we need to worry because events are not lined up. The only thing that we need to worry about is the two global events, Russia and Ukraine, and of course along with that China, and how much of that Chinese Omicron impact has on the world economy, including India. So I think time to stay put in what your investments are, time to increase your capital allocation towards equity market. And my sense is that we should possibly be coming out of this sooner rather than later. These levels are crucial on the Nifty and Sensex 56,600 and 16,900 because we are somewhere close to about 200 DMA. And I think if we are able to sustain at these levels and move up by the time we wind up the trade today or tomorrow, then I think there is an opportunity for a little bit more headroom as far as the equity markets are concerned. So if you do get dips, I think it will be a great opportunity to buy. This is what I mentioned earlier. This is what I mentioned now. Short to medium term traders need to be a little bit careful. If you are able to bail yourself out on the recovery, then you should do that. Try to have a long-term approach to equity markets because that has always played over a period of time. I don't think there is any kind of a concern, and more so I think the initial forecast as far as the monsoon is concerned from the Met Department has been positive. We should possibly expect one more year of normal monsoon, which will again be great beneficial as far as India is concerned. But crude oil prices, rupee dollar equation, situation as far as Russian and Ukraine is concerned, and the fourth one being, of course, the Omicron outbreak in China. So these are the four things which I'll be closely tracking, and possibly we should be in a much more better shape. Try to look at all those sectorial investment ideas that I had given out last time and increase your capital allocation. Thank you very much for your patience hearing, and I'll see you again next week. Take care. Bye-bye.